All right. Hello, everybody. We're here, XR Podcast number 11. Today, we got the honor of two people from the U.S. Financial. We got Agatha Weiser and then her dad, big accountant, Ziggy Karas. And then we got good old Lucas from XR, Lucas Morrow.
Hello, everyone.
So thanks, guys, for coming. You know, it's an honor to have you here.
Thank you for having me.
Thanks for having us.
How long you been in business, U.S. Financial?
31 years. So
31 years. So obviously, you didn't start it.
I was like 9.
You were
I worked there as a child, organizing magazines and, doing things to earn, little money here and there.
Earn room and board?
Yeah.
Thank you. So we just started out as a mortgage company. I'm sure he'll elaborate on that. My mom was an agent and he had to get business somewhere and he wasn't going to get it from, all these other agents because Helen was an agent. So he started doing accounting and taxes. And that business ended up blowing up even more than the mortgage business. And they've got, at this point, thousands of clients. They've been in business for 31 years. I graduated college in 2004 and started doing mortgages, took that business over. My brother and him run the tax business together. And then my husband does retirement planning. And we are just a little one-stop shop.
One-stop shop. So
good old Des Plaines.
I met your mom. She's great, and I understand she probably was. Really
She's
good.
retired now.
She's retired. Thank God, because she'd probably be really good. She probably was a really
Under
good.
protest, she's retired.
Under protest. So who was doing mortgages when you guys opened? Was he?
He was.
You were doing mortgages before?
I started a mortgage business. Basically, my wife pushed me into it. Being the agent and pretty productive agent, she was pissed from time to time on the loan officers. And he said, okay, maybe you can start doing these things. So I said, I can try. I was between jobs at that time. So I said, okay, she just put me together with one of her favorite brokers. And my first mortgage application, was after 20 minutes course. From this moment, I start learning. I started attending seminars, I started attending conventions, I started doing a whole bunch of stuff. I even was a keynote speaker on a brokers convention in New Orleans on side of George Bush the Older.
Let's back up a little bit because obviously you're from Poland, right?
Yeah.
And how old were you when you came here?
He was came in 78.
Oh, 78.
Yeah.
So how old were you at that time? What was your age?
30.
30. Oh, so 30. Yeah. And then to jump into mortgages, and then you had to go to school to be an accountant.
Because my educational background is aviation engineering.
Oh wow! Well, we're taking a turn.
So
He was an engineer. Helen was a journalist.
And then we got Lucas. You were from Poland too, right?
Yeah, I came here in '93.
And how old were you?
I was.
Oh, we're gonna do the math.
I don't even know. 12. I was 12 years
12.
old.
Okay.
So yeah, went to Catholic St. Hyacinth, Jackovo, and then went to St. Patty's, so Catholic boy. Graduated there, went to community college, and then went into banking. Met Greg and you back in 2000.
Back in 2000.
Back in 2000.
I wasn't doing real estate.
You weren't doing real estate. Greg started doing real estate, and then Greg left banking. He went to a different financial institution, got his real estate license, and then we lost touch for a couple of years. But then we reconnected. We had coffee, and he offered me a job. And I asked him, "What do you want me to do? Just go pass the test." 3 months later, I give him the certificate, and he's like, Greg, what the heck? You were serious? I'm like, yeah. So
You're not really a formal accountant. You're son.
right now I can say I am.
30 years later, yes. But
He
the
is
point
now.
he didn't go get a CPA just to do taxes because you don't need a CPA to prepare somebody's tax return.
Okay.
And on top of it, CPA is an accountant. I am a tax specialist. Actually, I hate accounting because that's boring.
Me too.
But figuring out how to pay $1,000 instead of $60,000.
You like to solve the
It's a
problem.
challenge.
You like to solve the problem. So myself, I'm incorporated as, and I get this question a lot. What benefits, disadvantages do I do? Everyone's like LLC's popular, but some people want to be a corporation.
yeah,
What's the benefit of being corporation versus just getting 1099 on your taxes?
Oh, it's a huge benefit.
Huge.
Number one benefit is that you have a legal protection because corporation is another entity which in case something happen. Not necessarily that you do something wrong, but one of your clients or one of your employees, something bad happen, and they can, if you are an individual, sole proprietor, everything is on your back. When you are a corporation, they go after corporation. So simply, if it's something really bad and you are not a criminal, you're just closing down the corporation or bankrupting corporation and opening that next one on the other side of the street, and you still.
Well, let's hope it doesn't come to that.
But that's the legal stuff. But the other stuff which is sometimes neglected is savings on the taxes.
Yeah,
It's
that's
a
kind of what I
different-
wanted to get
Different
at.
word between being.
So how much more would I save? Let's say if I'm just an individual versus on the taxes, is there more write-offs?
Depends how much do you know about the tax law, and
That's why I got you. That's where you coming in.
I give you simple example. Let's say you bought a SUV $50,000,
Okay.
and you didn't plan to drive it for longer than 3 years. So after 3 years, you switch to something else, and when you using your car for a business, you can write off the cost of the mileage. Or everything was connected to it. There's two ways. One is IRS standard deduction. Every year they're changing how much you can write off per mile, or you can write everything what comes. I mean, depreciation of the car, fuel costs, oil, repairs, registrations, everything was connected. And depends what you choose. If you choose wrong, on this example, 50,000 SUV, driving big river for 3 years, if you choose standard mileage, which is most people are doing because they're simple, you are losing like $5,800.
Wow.
Just one thing.
Yeah, that's it. See, that's another deal.
Yeah, it is.
So it's important. You know, everybody is different. Situations are different. But if you're doing this kind of decision, you need to do some homework and see which way is beneficial, more beneficial to you.
Yeah. So then also on the consumer side, buying, right? I know there's a tax. A couple years ago, they changed the property tax.
Yeah, that's.
Is that really come into play too much or not?
Way of writing off. There's the same way you can write off the tax, but there's a limit, top limit on property tax and state income tax, $10,000. So basically, people in earning level of like $55,000-$65,000 are screwed because they normally have a more 3,000-4,000 of state taxes, and they have a 5,000-7,000 of property taxes, and they are limited only to 10,000. So that's the bad side. But this law, it was from 2017. It gives a lot of good stuff. So this is the very rich people don't like it, but.
But 10,000, that means if your taxes are like 7, 8, which most people are, you're okay.
Yeah, but you're bunching your state taxes, state income taxes, and property taxes, and some other stuff. So
yeah, I think that's why we got
sometimes
it's kind of going over my head.
You can feel the pain.
Agatha, how was it growing up over there? You had your dad, you had your father, broker, accountant, like having your mom real estate. I'm real estate agent. I got 3 kids. Because obviously you went to college, you did all the thing. What was the thing for you that made you say, you know what, I want to do this? You don't have to.
Number one, I guess I just don't know any different because that was my entire life. So, when you have parents that are self-employed and entrepreneurs, you're not. My parents never had 9-to-5 jobs.
Okay.
That never existed. So this was normal for me.
It was normal. So
I would go to friends' houses whose dad came home at 5 o'clock, and I'm like, what? What's going on?
Yeah, but did you ever? It's like some people find that appealing. Like there's people that say like, oh, I don't want to do that. They're answering the phone every night.
But we just didn't know any different. So to us, it wasn't weird. It was just normal.
No, I know, but some people might think. So for you, you kind of you were good.
So
with
I graduated college and
what'd you major in for you?
finance.
Oh.
All 3 of us, me members, we all majored in
See, your
finance.
path was set.
Well, sort of. But, well, they weren't going to pay for college if I majored in anthropology. Okay?
Oh, well,
Let's be honest.
it was a conditional.
No, but I mean, they taught us better than that. You know what I mean?
You
Like,
kind of knew the ground rules. You're like,
you
okay,
got to do something that's going to make you some coin, right?
Yeah.
So my entire life I was going to be a lawyer, and I was going to law school.
all right.
I had taken like all the prep courses. I had taken the LSATs. I was applying to law school, and he looked at me. He's like, "You don't want to do this," and I was like, "What do you mean?" He's like, "You're going to have a miserable life." He's like, "You're going to work insane hours. You're never going to have a family. Like, it's going to suck. So why don't you just do this? This is kind of the path of least resistance. It's already like here.
Yeah, you have a
Red
bit.
Bull
You
on
have
it."
something. You have something built already. It's not, you're not
And-
starting cold turkey. Like you're not starting from scratch.
Right. And so I was like, he's not wrong. And that's when I met my husband. And
there
the
we
rest
have
is
it.
history, right? But at the end of the day, he wasn't wrong, because by the time we had gotten married, already owned, our second home, my friends were just graduating law school and just starting the grind, working 90-hour weeks. And our business is crazy, but it also is insanely flexible. Am I right? We all have an insane amount of flexibility.
yeah,
So-
it's
that was hard to say no to. So, and at the time, I mean, oh my God, it was 2004. There was a loan called Fast and Easy. This was, everybody knew about Fast. I mean, it was so easy to get a loan back then. I mean, you'd have a pulse, you know what I mean?
yeah.
So
Looking for a heartbeat.
I was like, I am running circles around people. This is like, why would I go to college for 3 more years?
Yeah,
If I can do this, especially with a financial background. It was a no-brainer.
yeah. Well,
And-
but I mean, there's people with financial background. I mean, I worked with a lot of lenders. Look, you were in banking. You've seen it too. I think there's some people that are, you're very passionate about. I mean, I worked with people in the past, so I could tell you're very passionate and you're very good at what you do. So, but there's people. The background helps, but I think at the end of the day, it's still a people business. You can't
100%.
You can't just rely on education
So
and
I
knowing,
knew
and knowing-
everything. Yeah, like I got really good grades and everything like that. And he sat me down and I had no preparation. I sat next to another loan officer for maybe 2 months and we're like, all right, here we go. And
That's the best way.
even though I knew all the facts, it doesn't matter. Like you just have to be able to empathize with people. And it's at the end of the day, it's a sales job. All of us have sales jobs. I don't care what anybody says. It's a sales job. It is not finance. It is a sales job.
Yeah.
And you have to know how to, read people, figure out what their wants and needs are. And
If you
know.
listen, I think that's key. But then again, there's a lot of people that could do that side of it too, but then they don't know what they're doing.
True. But most people in our industry are extremely transactional. They are not relationship-based people. And that is night and day difference, because if you look at somebody and say, oh, that's only a $70,000 loan, or that's only a $150,000 purchase, like I don't have time for that.
Yeah.
Those people turn around and have a purchase for $500,000.
Yeah.
They have
Oh,
a
yeah.
sale for
I
$900,000.
have a friend. You don't know. That's you got.
Same here.
Yeah, right.
I mean,
This-
we have clients that purchased, condos for $50,000-$60,000 back in the day, and then a few years later, they're buying a $500,000 house,
Right.
or they'll refer you to their family. So, yeah, absolutely.
Didn't you just recently have something like that happen where you're doing something or maybe I'm thinking of somebody else? Didn't you have something where I don't know, somebody called you on something, you sold something right in the neighborhood, and you just you got a list.
I did an open house, and a
see.
client came in. He liked what we did, how we presented, and we got another listing right next door. So,
There you have it.
yeah.
So, like, if let's say that listing wasn't great, or you had a buyer that wasn't great, but one thing leads to another. I did
Right.
like when I first was new, I did a rental. It was brutal, but but then they referred me like 2 people.
Right.
So
So
you
I'm a
just gotta
big
do it.
believer in good karma, and you do the right thing and it's always going to come back tenfold. And it does. Like in 19 years, it has come back. I can't tell you, like, the day after the 2016 election, interest rates went up 0.5 point overnight. 0.5 point overnight, like from 4.5 to 5. And I had a couple clients who shall remain nameless that I had to do the loan for free. And for free means at a loss, because we just spent a month working on it
Yeah.
and now we're not making any money. But it didn't make sense for them to do it any other way other than at this rate. And I'm like, what am I going to do? Piss them off and do the loan and not do anything? Or should I just do it for free and
Just get it done.
get it done and make them happy? And those
That's
people
what
ended up referring people.
Well, that's what it is.
So
yeah.
you just have to believe that there's, again, it's not just a
You gotta-
transaction. It's
Oh,
It's a relationship.
yeah, you just got to put yourself in their shoes, and that's
So yeah, the
that's,
finance part of it only has a tiny bit to do with it. Like, yes, that's important. I know my stuff.
Yeah.
But
No. Wow.
the rest of it is a lot more important than all of that.
Well,
So
sometimes things get complicated, and there's you get some, there's people that can't get loans. I mean, like I did it when back in the, like when I started back, it was, a lot of foreclosures, problems with property.
Mm-hmm.
You had to, in people where had bankruptcies, foreclosures on their
Yes.
record. So you got to kind of know the rules. Okay, well, because I know a few things, but I know from unfortunately being burned, like, oh, that desktop underwriter thing, it
Right.
doesn't pick up short sales. So I'm running around, then find out later, this guy, I'm like, oh, how come you didn't see it? The guy at the big box bank, they're pushing papers
Well-
because they got the sale, they got their manager just pushing them to, get applications, but they don't care. They don't care about closing. They're not even licensed. They're walking in there. They're not licensed, and they're just trying to like look good in front of their manager. So, he doesn't qualify. What do
Sure.
you want me to do? So
Well-
there is some things you have to check for that some people.
that, but also nobody knows everything. Like, I've done this 20 years. I don't know every guideline there is
Oh, yeah, I
in
know.
mortgages, but I'm human. And if I don't know, I am humble enough to say, I'm not sure and I'm going to find out. And people respect you more for that than being like, oh, yeah, I got this.
Yeah.
And that's why in our industry, most people, this is what realtors tell me, is most lenders are just gross. That's what they say.
Yeah. Yeah.
Because they all kind of talk this big game, like they know everything. Nobody knows everything.
No.
One person knows everything and he's up there.
Yeah.
I don't know anything. You know what I mean?
Even if you know something today, tomorrow maybe.
Tomorrow, well, yeah, I
Exactly.
found out there was guidelines. I was telling people on like FHA, and I'm like, oh shoot, they changed it. So yeah,
They did. I told a realtor last week because she's selling a flip to my client. And I'm like, oh, yeah, no, it should be fine because they flipped the house and the closing was more than 90 days. But the deed wasn't recorded until May. And I'm like, sorry.
Yeah, but can't they? I see. I get mixed feeling. I get mixed feedback.
So-
Can't you show the sale date? Can't you show the sale date on the because it on the tax record? Oh, at least on our system, it'll have recording date and tax and sale date. Can't you show it?
So ours was the closing date was in April, but the recording
Yeah, but they
date
wouldn't
was-
take it. How can they not take it? That's when it closed. Like they
I
could
know.
take it. What if it takes a year to record?
I know. I don't know. That's another thing subject to interpretation. One bank may kind of say, okay, but for the most part,
Or
they
you get
said no.
upset.
Because I thought that it was the same thing. And then I went and double checked and they're like,
Yeah.
Again, it's you're good or not too good if you know which lender will take it, which lender will not take it. And if one is not taking, you have to go around and find the one who takes.
well, that's why it's great to be a mortgage broker because we have options.
Right.
Yeah.
Shameless plug, right?
Yeah.
We have options to, on a cost, rates, and,
Yeah,
and
so
programs, yeah.
just for people that don't, you're just in case it goes over anybody's head. So let's say I had this happen now with you, of course, but let's say an appraisal goes bad, right? Well, I can't just forget about an appraisal, So if someone wants the house that much, like, correct me if I'm wrong, you could go to a different lender and just restart over, hit the reset button if the buyer wants, and say, hey, let's just try to go with somebody else and see if they can, when they do appraisal, if it goes bad. I had that happen once.
It happens on every other deal right now. So,
Yeah, so
there's options out there. So the first option when it doesn't appraise is renegotiate.
Yeah.
And lately, everybody's renegotiating. They all sign these little waiver thingies saying that I'll pay up to X dollars. more.
Appraisal gap. Yeah.
And then the seller will come down in price and they meet in the middle. And that's been happening a lot more in the last 90 days. The first 3 months of the year, absolutely not. Sellers are like, nope, like you get another appraisal. The problem is that if a bank already does an appraisal and they have it on file, there is no way that they are going to accept the second appraisal with a higher value.
No.
They're just not going to do it. It's a waste of everybody's time. It's a complete waste of time to appeal the value.
Yeah, that's right.
The only way the value appeal work is if there's really legit mistakes in the appraisal, like they missed a bed.
I had
Or something
I don't mean to
big.
cut you off, but one time it was an FHA rule where they flipped the house. It was less than 6 months. This time they had FHA required 2 appraisals.
Yes,
One
they
came
still
in.
do.
One came in 10 grand above purchase. The other one came in 14 grand below.
Wow.
Same appraisal company.
Yep.
Same 2 weeks apart. Same company. Same house. He would not change it. I go, I don't need you to match the other guy. I go, here's the appraisal that was done. Your company.
Yeah.
They're like, oh, it's just an opinion. I go, yeah, but what the heck, man? Like now the
I
lady
know.
doesn't get the house. So even that, I had another appraisal by the same company showing up like an $18,000 difference. I needed a meet in the middle. The appraiser wouldn't change it.
So
Would
rule
not
of
change
thumb,
it.
if you know that it's a flip, just go get conventional buyers because it doesn't matter.
I know,
It's
but you
so much
can't.
easier.
Yeah, but you can't advertise. I mean, it's hard. Then,
So my
then-
buyers right now are in the same situation. It turns out they're buying a flip, and she wants to go FHA because she's this very specific type of client where she has good credit but not great credit, but makes too much money to qualify for any kind of like first-time home buyer stuff. So FHA makes way more sense for her. She'd get like at least 1% lower in rate on FHA. And FHA changed the rules right now where the PMI mortgage insurance is cheaper than it was 6 months ago. So for her, she's saving $300 on her monthly payment. She can't go FHA because it's a flip.
Yeah.
And on the flip, the time hasn't passed.
I know you mentioned first-time home buyers. You know,
Yeah.
a lot of our clients that are first-time, I get discouraged with the interest rates going up. What are the first-home buyer programs out there now?
So,
I want to encourage our clients to, don't get discouraged.
okay. So first and foremost, if they make under this area median income limit, which some people will fall into it. If there's a couple, you put one of them on the loan if they qualify. Right now, it's a little under $90,000. So if anybody's making 87 and some change, they qualify for all sorts of first-time home buyer. So the rate is way lower. I mean,
Really?
we're talking 0.5% lower.
So if they make under 90,
Yes, specifically, it's like $87,236.
Okay.
Don't quote me,
Okay.
but somewhere around 87. So the rate is way lower.
I'm sorry, is that single or joint?
What do you mean?
Tax returns or income?
It doesn't matter as
It
long
doesn't
as
matter.
the.
Okay,
Yes.
okay, gotcha.
So even if their base income is under that and we don't need the overtime to qualify, they'll take it.
Okay.
So
but
Fannie,
I think I'm sorry to cut you off. I think he's asking if it's like, let's say the husband makes 70 and the wife makes 60. Are they over it? They're
yes,
over.
they're over, then only one could go on the
Oh
loan.
yeah, so you get
Okay,
so you
okay.
get
So if they qualify, then
Okay.
only one of them goes on the loan.
Okay.
And they qualify for either, I mean, Fannie and Freddie both have programs right now where basically all these like adjustments to the interest rates, they're capped. So rather than getting 7.25, they're getting 6.6 or something like that. It's a big difference.
Okay.
We have a 1% down program, so somebody that doesn't have a big down payment, technically it's a 3% down program, and then the lender will give you a credit for 2%. It's capped at $4,000. So this isn't for people buying $600,000 houses. It's
Okay.
for people buying like 350,
Yeah.
or in that price range somewhere. So that, I mean, I have somebody buying a $315,000 house, and I just looked at her papers because her closing's next week. She put $5,000 in earnest money, okay, but she's getting a refund of like $6,500 at the closing.
Is that an FHA program?
No,
No.
okay.
conventional.
Oh, wow.
Conventional,
Okay.
yeah.
Okay.
So you don't need to have insane credit. You can have 680 credit score
Okay.
and qualify for all this stuff. So it's just there's plenty of things out there.
Buy downs.
Buy downs are a huge one. So you could negotiate a 1, 2, or 3-year interest rate buy down into your mortgage, where in year one, let's say today's rate is 7%, you could be getting 6, 5, or even 4% in year one. That's how it works. Now, it's not free. It costs a little change.
Okay.
But it's not as much as people think. I mean, on an average, I think I had somebody that was paying around $500,000 for a house. The 2-1 buy down was about $10,000. You can negotiate that into
Credit
it.
from the seller, yeah.
Right. And the best part about it is that let's say that in year one, let's say that instead of 7, they have 5 in year one. And then in the 14th month, let's say, so a little after a year, rates fall and they refinance. That money that they were given as a credit, let's say that there's $4,000 left over, that's their money. So that money either gets returned to them on the payoff or they're getting it as a principal credit. So it's not like paying points where when you pay $7,000 in points, it's like buying a new car. The minute you drive off the lot, the money's gone.
Yeah.
You'll never get it back.
Yeah.
But with a buy down, you're kind of borrowing this money, but it's yours, but you're using it for this thing, but you're going to get it back.
Yeah, so whatever you don't use gets so like let's say it costs $10,000 for the buy down, you get the credit from the seller, right? So year one, you're benefiting, you're only paying 5%. Rates drop mid-year 2,
You refinance
and you refinance.
and you
Let's
have
say-
the money for the refinance.
So how do they calculate that difference? So it's like 14 months.
Because it's basically a subsidy. It's very simple math. You just take whatever the difference is between those payments, and that's the amount that you pay for this. And the money is basically in an escrow account.
So it's in an escrow. So then boom, they send you. So okay, hey, there's like $3,600 left.
It's
you get-
yours.
It's yours.
And a refi
So-
is like $1,700.
So there's really no
So-
risk. There's no really any risk
No,
to do it.
you
It's
just
not
have to-
like you're saying. Well, do I pay the points and get down to 6? And then what if rates go down 6 in 3
Even when
months?
you pay points,
Yeah, I'm just
The
what I'm
money's
saying.
gone, like
The
you said, the money's gone.
not only that, but you're paying a lot of money because it's a permanent thing. When you buy points, you're buying a 30-year fixed rate permanently. So instead of 6.8, you're getting 6.5. But here, instead of 7, you're going to 5, let's say. So you're not talking about $80 in your monthly payment. You're talking about $600 in your monthly payment. That's meaningful to
Yeah.
people
No, it's
right
huge.
now.
Yeah.
You know what I mean? That's a car payment.
Totally.
So that's why I think that that's 1,000% the way to go when you're buying a house right now. It's hard because right now, when there's 10 offers on every
I
property,
know, that's the thing.
sellers are like, oh, well, I'm not going to give you credits. You got 10 other offers here.
It's a little bit easier now.
It's hard, but
No, if the right one comes, I mean, listen,
Yeah.
if the place is on the market 2-3 weeks, you got a shot.
Exactly.
If it's day
Exactly.
one and you want, 10
but you
grand
can
less,
always try. You can always try.
you could always try. I mean, you could just
The
up
worst
the,
they can do is say no.
it's right. I mean,
Hey,
you
a lot of deals get canceled these days, so
No, this is the time.
always a backup, and
Not a lot. Yeah. Oh my God. Every other deal. I left for vacation on June, I want to say 7th. Literally, I was not even 6 hours out of Chicago. I had 6 contracts within 24 hours, 6. Out of those 6, 3 fell apart.
Yeah.
Because what happens is they're overbidding, they're going crazy, and then they have buyer's remorse. They panic, and they're like, oh, this isn't really what I wanted.
yeah,
It's crazy.
or they're realizing that, I think I overpaid by $30,000-$40,000.
yeah,
Right.
they get their payment.
Yeah, I want to back out that deal.
They
Yeah,
get their payment calculator.
So yeah, unfortunately, that's happening a lot right now. Hopefully, it calms down because it's exhausting.
Yeah, I think when
it's
I think
exhausting for everybody.
yeah, it's tough because they what happens is they're they don't have time to process. So something comes
Right.
up, boom.
But
You got to go, like you're a doctor, run over there, do all the stuff, push, and then they're like, oh, wait a minute, what's my payment? Oh, I'm not
I know.
comfortable here. I was at
this market is not for the faint of heart. That's what I'll say. As far as our industry is concerned, it is insane, and I think that people are just going to get fed up and quit. Honestly.
Well,
And-
I think so. In 2021 and 22, I felt like a lot of people were quitting. That the difference is there's still an appetite enough for what's out there. Like even with it,
demand is crazy.
there's a lot of people that dropped out. Like there's people I've showed, they're gone, but there's still enough demand for the inventory.
Mm-hmm.
So there's still an inventory problem. So
Yeah, my pre-approval list is a mile long.
yeah, I mean, how many
they
people are
just
like,
haven't
holy
found
cow?
anything.
I got people like I met in 2020, 2021.
Yeah.
It's like they're still haven't bought nothing. It's not there. I sent somebody something today. Their budget's 500. There was like 600. And this is what they want, but it's 600,000. And they're going to have to fight for it.
Yeah, you have to be
Yep.
careful when let's say you're working with a loan source and you send client to be pre-approval, pre-qualified, and most agents, loan officers, are trying to pre-qualify on a max. They take in your income, little tweaks, and they say, okay, you qualify to buy $500.
Yeah. So the max, and I'm going to cut you off, the max is how much? Like gross income? Just to give some math. Like what's the max gross income?
So the rule of thumb is basically your payment should not exceed 45% of your gross income.
Yeah.
You could go up to 50, but 45 is kind of
So let's just use
the
that.
cutoff.
Let's use that term. So you make $5,000 a month. 45% of that is what?
You make, I don't know.
20. Hold on, no. 27.
Can't do
Why
that.
do you make us think?
27. Let's call it $2,500.
Well-
But if you're making 5,000, what do you're coming home with like 3,500.
Yeah.
So the 25, you're not going to make it.
Right.
You're not going to make it.
Right.
I'm sorry.
When you're making 10,000-50,000 a month, then you can be on the
Yeah, you
higher-
could do.
Absolutely. So
But when you are in a 5,000
I know.
range, you have to tell the guy that you buy it, you will have a mortgage, interest, principal, tax, insurance, sometimes PMI, and on top of it, you have to have electric, gas, internet, water.
Whoa, slow down here.
People don't take that into
whoa,
consideration.
Easy.
You have to otherwise.
Easy with the bills.
Otherwise,
Let's just say, hey, make sure you can afford it and end it. Well, no, I know, I agree. So, a lot of people have like, a lot of people I do, and I'm sure Lucas, you can attest to this. They don't get pre-approved, right? They just like to shop, which is fine. I get it. They're like, well, I'll do it. I'll do it when I find something, which is not good for a number of reasons. But I think they have an idea, like, yeah, $350. That sounds good. They have no idea what the payment's going to be. No
Right.
clue. I mean, they might be pre-approved for it, but it's like, oh, wait a minute, I don't want a $3,000 payment.
Right, and that's.
I want
what it is right now.
$2,000, but I'm like, dude, yeah, but did you add it? Like, that's what it is.
Yeah.
You know. So a lot of times to know what your payment's going to be, because like, let's say you find a house today that it's like multiple offer, then you're scrambling, you know, versus like it's free. It's not like there's a chart. Like there's no risk in doing it early.
But you know what? People are still paying because the rents are insane.
No, rents
Like,
is
I'm seeing what
ridiculous.
people are paying in rent.
Ridiculous.
And they're like,
It is
why
what
would
it
I
is.
pay $3,200 for this when I could pay $35 and have my own house?
And that's why I think the market, you know, all the
So-
crash talk, it's like, that's why it's not going to crash.
Anyway, with few stupid exceptions, even you prepay lightly, you are still ahead financially over longer period of time. So,
Are you talking about prepaying the mortgage?
no, about paying the higher price, you know.
Oh yeah. Oh yeah. No, I mean, there's people that 2 years ago they're like, oh, it's too much, it's not worth it, and it's like,
Digging
okay,
themselves now.
yeah, it's like now you could have like the most expensive house in this area before that, or you know, in your realm. Like I had a couple looking around here, they were looking trying to find something like 320. They could have got 323 and a quarter, right? That same house now is 390.
Yeah.
Even if you they could have bought one done at 390 back
And
then. Now it's like you're
but
doing.
it's not going fast down because we have access to the statistics for this
Yeah.
whole Naperville, Evanston,
Yeah,
Chicago.
metro area.
So basically, for the last 12 months, the rates, I mean, the prices went down only 0.89%. 0.89%.
They-
Just that. So
Yeah, and well, you got to think the mortgage rate doubled in the last 18 months, so they're still paying. Like if the mortgage rate stayed the same, could you imagine how much you would still have a worse
I mean, yeah,
inventory?
I'm thinking I had, let's see, January, we're in 2023. January of 2022, I remember this because I had COVID brain for a month. That month, rates were still 3.5, and then it went up to 3.75, and I had somebody being like, "Oh, that rate's too high," and I was like, "You better take this and just
Yeah.
sign on the dotted line." And yeah, literally from January to January, it went from 3.5 to 7
Crazy, I know.
in a year.
with the short period,
Yeah,
even
I know. and
close
it-
to 7.5.
The frustrating thing wasn't happening
Yeah.
like in the like right now, the summertime when things slow down. I said, "Why? We're gonna raise it. Just do it when it was busier." Now we had open house. We said 30 people in line. I'm like, this is ridiculous.
Yeah, I mean,
Remember that?
yeah, some clients are not stopping. They're just, whoever needs to buy is still out there buying, overbidding, and they'll be happy. And
Yeah.
Listen, looking at the long term, 7% interest is not that bad. My first house I was buying, the 30-year fixed mortgage was 18.5%.
Yeah.
18.5%.
I remember people saying they had 12, 10, 11.
So I was lucky because I took over the mortgage of seller's mortgage. Seller was leaving country and he left. I was just paying his mortgage.
Yeah.
We did the land trust. Everything was legal, but I had a 9%. I was lucky camp 9% when everything was over 18.
all right, so switch some topics a little bit. What advice can you give to real estate agents how to file their tax returns? How to, file
Like what would be, what's beneficial that maybe they wouldn't know?
and what mistakes a lot of them make?
Yeah, most of the agents have no choice. They have to file Schedule C. If they are just agents, they are not managing brokers. They have to file Schedule C because they don't have a luxury to open up corporation because brokers, agent will not pay them to their corporation, has to pay them to personal. If they are broker agent, they can open up the corporation or LLC, and the money can be split even on a closing, and it can be paid to the corporation. But always pluses and minuses. S corporation or LLC. Depends. I would start with LLC because if you set up the single member LLC, it means just you're gonna be the one owner,
Correct.
not husband, wife, not partners, one member. You have a choice. You can file as a corporation, You can ask for S corporation exemption, or you can file on Schedule C. If you have an income, let's say 35, 40,000, it doesn't pay to open up the corporation.
Yeah, what's like the dollar threshold? I mean, anything over 100?
No, 40,000.
Okay.
40,000 is
Okay.
depends what kind of, yeah, I'm saying, let's say 25,000 net income.
Okay.
It makes sense.
Okay.
So if you make it, so if you're an agent in an office and you're making 25,000, it would probably pay to open up a corporation.
Yeah.
Now here, you could open up a corporation. I get paid by my corporation gets paid here.
But the corporation, that's the benefits that you whatever S corporation makes, it goes to you personally as a dividends. Okay.
Yeah.
So basically, you're not paying FICA, Social Security, Medicare, and unemployment. So it leaves in your pocket 15.3% of the money. 15. Let's say you have the income 100,000, 15.3 is $15,300 stays in your pocket. But you have to remember, when you're operating as a corporation, you should have a payroll for yourself, because corporation cannot manage itself.
Got
It
it.
has to be someone working
Okay.
there. So you will be the owner employee. So you can set up the payroll. Depends what you're making. But let's say you're making a corporation making 60,000. Probably if you make payroll to yourself 20,000, IRS will let you go, and 40,000 remaining goes as a dividends. You say from 40,000, 15.3%, $6,000 stays in your pocket.
Yeah. So you could from
Yeah.
40,000 by having a corporation, you probably retain an extra 6,000.
So I would. It's easy to set up LLC. It used to be more expensive and more complicated, but right now it's same price like S corp or C corp. So costs are the same. It's better to start for beginning single member LLC,
LLC,
and
okay.
go on a Schedule C. But when you start making more money, you just ask. You can even ask back for acceptance as a S corp, and you can file as a S corporation.
Backdate it?
Yeah, you can. Yeah, not you have to ask IRS to give you that privilege. Yeah, so that's being on a Schedule C is it's also some, because somebody say, oh, I made only 40,000, so maybe I made 40,000, it will pay to do the corporation. Not exactly, because let's say you are married, you have 2 kids. Kids are like say 7, 8, 9, 10. You can hire your kids. Up to 18 years, you don't have to pay FICA for them. Oh. If you are a sole proprietor.
Okay.
So let's say you pay them, right now standard deduction is going to be $12,800. You can pay your kid $12,800. Kid is paying 0 tax. You're not paying FICA, and $12,800 is subtracted from your earnings.
Totally.
You have
Wow.
2 kids.
How much were you making? That's why you're bankrolling. You got hired. My parents put me to work. I never got no Schedule C,
You know,
12K.
Pay me the Polish one
You know,
in cash.
and if,
Oh, yeah?
if you want to go even
Checks in. I got keep going. Don't worry. Checks
if
in
you
the
want to
mail.
go even further, you can
So
pay
12 grand night.
your pay kid 12, let's say 12,800 plus 6,500, and you opened up the IRA account for your kid, and you put 6,500 to IRA account, but from your account, you're subtracting $19,000.
Wait a minute. Back up. I'm sorry to make you explain this again. So you have a kid. You're going to pay him how much?
Normally, standard deduction is $12,800.
Okay, 12,800. Okay.
So now, but you can also set up the IRA account for your
Okay.
kid
So yeah.
and pay him or her more 6,500
Okay. So you can pay him an additional.
additional, so it's going to be 18,000 something, and money stays at home.
Yeah. So instead of me dishing out, just giving them money after tax, I could pay them the 12,000, or if they're going to do an IRA account, I could pay 18,900.
Our money can stay in a
It's like you were born in the right
and
family.
everything is legal. What basically what this words in this business, from my experience, that people are trying to push their luck to beef up the expenses, and more or less I know it's something is real or not real, and I'm saying, man, don't do that, because we both may end up in jail. Okay? Just do.
But you have immunity,
just do
though,
the
right?
right thing.
Yeah, yeah.
Whatever.
You gotta pay Uncle
legal,
Sam.
You can take legal.
So
Yeah.
Agatha does these workshops at her office. I've been to 3 of them, and so I got to listen to your dad. I got to listen to your mom. I got to listen to someone from a title company. Your husband does a good
So it's
just
funny.
just kind of tips and stuff. But the best thing about it is that raffle.
Yeah. Frank wins every time.
What's the raffle?
Oh, there's always just some sort of
Nah,
raffle.
she gives away, but
And it's just coincidentally he wins every time.
I had a good streak
But-
going, and then they banned me from playing.
So we did, we did a whole workshop on tax stuff for realtors, and we're not doing it. We're not looking to. We were doing it for clients for taxes. We were doing it because I have a mortgage business and I want to offer value to realtors. And these realtors are literally lining up to talk to him, and now they're all his clients by accident. We weren't even doing that on purpose because we're slammed, with all that stuff.
I just want to add one thing, because you said that, January I will call you. Not January.
Yeah, don't wait till
January is too late.
Too late, man.
November.
November, October, Halloween.
Well, I want to set up an appointment now for January.
Before end of the year. because
Exactly.
You have time to do
Yeah.
things.
To make a plan.
Yeah.
Everybody does it when it's
perfect,
too late.
Perfect.
Yeah,
good
so
to,
you're-
good to know. So October,
Halloween,
November,
you need to get your
yeah.
costume.
Exactly. It's like people making an offer on a house and they're like, I need that pre-approval. I'm like,
Yeah.
why didn't you call me 3 months ago? So I would have given you homework and told you what you need to do
Yeah.
and not do.
Yeah.
It's the same with taxes. Like, do not call in January, you call in October.
But anyway, again, getting back to your events. I mean, besides
yeah.
all the education, we have a good time afterwards. We hang out.
We do a little happy hour. We teach realtors a thing or
Yeah.
two. And yeah, I mean, we always bring in somebody that is going to give them some sort of value. Because I talk a little bit about all my little bells and whistles. But at the end of the day, the funny part is everybody's lining up to talk to my husband of all people. He does retirement planning. We call him the Jake of all trade. His name is Jake, but he knows everything. So he's talking about, last time, what was he talking about?
Electronic business cards.
Yeah,
cards,
like
this little
random things, just
random things, but let's things you have to do, unfortunately,
things you
and
need to have to be successful.
just
So-
different stuff. And I know he's your IT person.
He is.
I'm my wife's IT person too, and I'm terrible with
Listen,
that
I do
stuff.
his
so-
laundry. He does my IT. It is.
Yeah. So, but
It works, right?
It's a compromise.
It works.
It's a compromise.
It's a compromise. But he's got some cool things, and
That thing is
Yeah.
especially with the small business, real estate business, it's important to invest into your retirement, because normally most people in this business it's avoiding to pay Social Security and Medicare because it hurts.
yeah.
So
I-
when you're retired, you're gonna have $1,000 Social Security check, and it's not gonna look pretty.
A month.
Yeah.
I was gonna say, 'cause
so if you can properly invest, there are beautiful programs lately which beats the Social Security. Also annuities. Social Security is annuity, which can guarantee you pretty good income when you retire. So it's important what he does, and that's
Yeah.
Both
No,
of our industries, though,
We're gonna have him on next.
we should.
We will.
Both of our industries. The problem is that we are creatures of it's feast and famine. It's never
Yeah.
this. It's either you have 10 closings this month or you have one. And you're
Yeah.
oh my God, what am I going to do?
Yeah, or sometimes you're just zero.
So the problem is that I will say this, that when I first started, I was like, what do I do? Because people were making money hand over fist. And the advice he gave me was save it for a rainy day. He goes, do not spend all this money because one day it's not going to be like this and you better save that
No,
money.
you always
And
get
nobody in our industry saves money. In 2020 and 2021, when we were it was crazy. Everybody's on social media bragging about their new Lamborghini and they're on a private jet. And now those same people are like, oh, we're taking up a collection for our friend here because he has no business and he can't pay his bills. And it's like, you have to find a way to do this in a consistent way where obviously to have consistent business, but also to give yourself consistent income and put a little bit away and do something smart with it, or you're going to be screwed.
Yeah. Well, it's not. Yeah. When it's busy and it's great. But then when it's slow, it's
And when it's busy, just
those months
save
are
some of that,
those
yeah.
months are long. Well, yeah. Well, back to your corporation. That's what some people do. You know, I'll include myself in this. It's just like, okay, I'll pay myself a salary. I'm getting this
Yes.
much per month, and then if I get extra, then December
That's-
I cut a bigger check.
Most people think that when they pay business expense with credit card, that is legit proof.
Yeah.
Is not. Paying credit card statement shows only the amount. You have to have a receipt, valid receipt, what you bought, if this is really business expense. So receipt and proof of payment. When you're paying by check, you have to do not only face of the check, back, cancel check that was cashed out. So that's important. And also there's a whole list. IRS is pretty good in providing the list. What you can write or what not. I have a worksheet what you can use and what gives you the idea what you can, what you cannot, and how to do, just a little not accounting, but
But a little bit like a
Your
spreadsheet.
expense report,
Yeah,
yeah.
expense
yeah,
report.
Yeah.
because you think you spend today $5, tomorrow $7, $17, $20. You say, oh, I will remember. End of the
You
year,
gotta keep
you
track.
don't remember that. You don't remember, and you're losing valid expense, write-offs
Yeah.
because you didn't remember. When you do it once a week, just summarize. 1 week,
What'd you do? Where'd you
everybody
go?
can remember.
I know, but it's
It helps. It's
I know it.
those are thousands of dollars.
I try to do it monthly.
Do you?
But I don't want to do the whole year.
It's brutal.
So,
I'm so
yeah.
I hate admin
Yeah.
ties, but you got to do it. I mean, it's part of.
Saves you from the audit.
When you operate in corporation, when you have a credit card in a corporation name, it's a different story. But when you
Well, if you have a credit card and corporation name, it's different.
yeah, because
Keep talking, I'm liking this. Go ahead.
Yeah, not only,
I'm feeling better
but
about
when
myself.
you're using your private credit
Oh,
card
yeah, no,
for
that's
business
different.
expenses, you have to prove everything.
It's prove
and
everything.
basically, you cannot write it off. You can show that you spend that kind of money, and corporation should reimburse you for it.
Yeah.
Then you can
Oh,
write it off.
Okay.
Got it. So if you're using your personal credit card, you got to be reimbursed by a
Yeah.
corporation. You can't just say, "Hey,
Exactly. Yeah.
in August I bought a
Yeah,
hot dog."
similar
with my
stuff
client."
with the cars.
Yeah.
When you're using personal car in a corporation, you cannot write off the per mile. You can write off the expenses, but it has to be reimbursed by the corporation. Then you can write it off. Yeah.
So for you guys, listen carefully because you guys are like live in your car, right?
We live in our car. It's
I mean, after the latest changes, it's a great situation because you can write off a special depreciation almost if you buying SUV over 6,000 pounds, so you can write off everything in 1 year. So it makes a difference.
I mean, if you're making money, you got to pay. That's just what it comes out. You can't make money and then not pay. It's not how it works. Well, why don't you? So, U.S. Financial. I know you guys are in. You guys service all Chicagoland. Your locations in where?
So we're licensed in Illinois and Florida.
Oh, Florida.
We are in Des Plaines, Illinois, but everything is virtual these days.
Everything's
so
virtual. And
we're at your fingertips.
that's right. Well, it was great having you on, Lucas. It was great having you on.
Thank you.
Thank you.
And we'll do it again. That's it, guys. So we'll see you next time.